What if I told you that one of the most powerful trading tools in the entire stock market has been sitting right in front of you this whole time? I'm talking about the SPY ETF, the fund that tracks the S&P 500. Millions of traders watch it daily, but only a small percentage actually know how to trade it profitably. Whether you're new to trading or someone who's been staring at charts for years, understanding how to work with SPY can completely change the way you look at the market. So today I'm going to break down exactly how you can trade SPY with confidence, step by step, using strategies that actually make sense and can be applied right away. Welcome back to the channel. Today we're diving deep into SPY trading strategies. I'll walk you through how SPY moves, how professionals use it to manage risk, and how you can apply simple but effective methods to profit from it. Stick around until the end because I'll share a trading setup that can help you avoid big mistakes and focus on consistency. SPY is one of the most traded ETFs in the world. Why? Because it represents the entire S&P 500, the heartbeat of the US stock market. When traders want to know where the market is heading, they don't just look at individual stocks, they look at SPY. This makes it highly liquid, meaning you can buy and sell without worrying about huge price gaps. For you as a trader, that's a big advantage. It gives you flexibility, quick execution, and a reliable way to track the broader market. Before trading, you need to understand how SPY moves. It tends to follow patterns based on market sentiment, economic data, and Federal Reserve decisions. When inflation numbers, jobs data, or Fed interest rate announcements come out, SPY reacts immediately. But here's the secret. Because SPY mirrors the S&P 500, it often respects key technical levels like support, resistance, and moving averages. Many professional traders watch levels such as the 50-day and 200-day moving averages. When SPY breaks above or below these, it can signal strong momentum. There are two main ways to trade SPY: day trading, quick in and out trades based on intraday movement. SPY is perfect for this because it has tight spreads and heavy volume. For example, a trader might buy SPY calls if the market is strong during the first hour of trading, then exit by lunchtime with a small profit. Swing trading, holding positions for days or weeks. Here, you're looking at larger trends. For example, if SPY pulls back to a strong support level and then bounces, swing traders might ride that move up for a few percentage points. The key is knowing your style. If you like fast action, focus on day trading. If you prefer patience, swing trading might be better. No matter how good a strategy looks, risk management is everything. SPY may seem safe because it tracks the S&P 500, but it can still move sharply during major news events. That's why smart traders always set stop-loss levels. For example, if you buy SPY at $500, you might set a stop loss at $495 to protect yourself. At the same time, plan your profit targets. Having a clear risk to reward ratio, like risking $1 to make $2, will keep you consistent. Another way traders profit from SPY is through options. Since SPY is so liquid, its options are among the most traded in the market. You can use strategies like buying calls and puts, or advanced methods like spreads. For instance, if you believe the market will drop after a Fed meeting instead of shorting SPY, you could buy SPY puts. This limits your risk while still giving you potential upside if the market falls. But remember, options require discipline. Don't gamble. Use them as tools, not as lottery tickets. Here's a simple trading setup you can start with. Wait for SPY to pull back to a strong support level on the daily chart. Look for confirmation with volume or candlestick patterns. Enter a position with a stop loss slightly below that support. Set a target at the next resistance level. This approach is straightforward but powerful. It allows you to trade with the trend, not against it, while keeping your risk controlled. So there you have it. SPY isn't just another ETF. It's a powerful trading vehicle that gives you direct exposure to the market and endless opportunities if you know how to approach it. Whether you're day trading, swing trading, or using options, the key is strategy and discipline. If you found this breakdown helpful, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss a trading insight.